On behalf of the Kansas Department of Agriculture, good afternoon to those logged in, and thank you for joining our webinar. My name is Dr. Mark Olson, and I am the Northwest North Central AFI Inspector for the AFI program. During this presentation portion of the webinar, all participant microphones will be muted. If you have a question during the presentation, please submit your question using the Q&A button at the bottom of your screen. Submitted questions and comments will be monitored by the Kansas Department of Agriculture staff. At any time during the webinar when asking a question, please include your name, city and facility, business or nonprofit organization, if applicable, so that we can easily answer your question. This webinar is being recorded and will be posted online for all participants. As much as possible, the presentation will also be posted online. Please note that this presentation will be recorded today. It is with great pleasure we welcome Carl York. Mr. York is a tax specialist with the Kansas Department of Revenue. His current assignment entails providing customer education, covering most of the taxes administered by the Kansas Department of Revenue, with an emphasis on Kansas sales tax. Mr. York has been in his current role with the department since 2008. He helps with enrolled bill implementation and compliance, letter and opinion ruling reviews, and education for taxpayers, tax practitioners, and volunteers through various venues. Mr. York is a graduate of Benedictine College in Atchison, Kansas, where he received his executive MBA. Let us welcome Mr. Carl York.
Well, thank you very much. Hopefully everybody will be able to see my PowerPoint, and I'll be doing my best to answer any questions you might have. Sales tax is it's interesting to me, of course, but that's because I am a tax nerd. It's interesting that there's different industries, and every industry seems to have their own caveat, but in Kansas, it's been around for quite a while. It's been around, since 1937. I just need to let you know that everything I tell you today is not binding to the Department of Revenue, which ought to just give you all the confidence in the world on everything I'm going to tell you. In fact, it's not just me, it's every representative of the Department of Revenue. And what they're telling you is they're going to believe everything that you do or sell until they audit you, then they don't believe anything. So what a lot of people don't realize, though, is what's available to anyone who has a sales tax number. They call it a sales tax registration, but it's a sales tax number who's in business. There's something called a private letter ruling. It's free. You're able to write in with a specific situation. So you can't write in for hypothetical questions. You have to have something that's actually happening to you. This is actually a scenario that is happening in your business, a situation that's actually happening. And the question, they're only going to answer what is asked. So you're going to want as detailed a question as possible, and you're going to want to provide as much information and as much detail as possible. Sometimes pictures are necessary. The kind that you take and not the hand-drawn kind. No offense to anybody, but if anybody's an artist like me, it doesn't work. I can make stick figures look bad. So they will give you this letter, and this letter then is binding. And the letter, so if the letter says whatever it is you wrote in for was exempt, auditor comes out and says, well, that's taxable. That private letter ruling says, well, this is exempt, that's your get out of jail free card. And it's binding only to you and based on your set of circumstances. Most people just don't realize that it's available. So what I did was I put the best way to get a private letter ruling is the email address there. In the subject line, you just put request for private letter ruling, and then it'd be to the department, which is the Office of Policy and Research. That's actually the office I'm working out of. But I just thought I'd let you know that. Like I said, sales tax has been around since 1937. What you might not realize is how you paid sales tax back then. You paid it with a token, but they didn't do the percentage. Kansas was the first state to collect sales tax as a percentage of the sale. Most people don't realize that either. But it started out as just state sales tax, and it started out on the sale of tangible personal property. That's the main thing. In law, tangible personal property, they have a whole section in law, which is in statute 79-3602. It's defined as anything that can be measured, felt, or any manner perceptible to the senses. That's basically a physical item. They also can define things as tangible personal property. So they defined electricity, water, gas, steam, and pre-written computer software as tangible personal property. So that's how they can tax that. So a physical item, which is sort of a large paintbrush, if it's a physical item or defined as a piece of tangible personal property, then it becomes a taxable item when it's sold. That's the default in Kansas. Basically, in layman's terms, under statute 79-3603, in layman's terms, it basically says for the privilege of doing business in Kansas, you must register, collect, and remit sales tax. So that's the default in Kansas, and that's what a lot of people don't realize is the default is everything's taxable. The exception is an exemption. So that's how an auditor goes out there and looks that it's taxable. And so anyone selling, they are required to either collect sales tax or have something to show a good reason why they did not collect sales tax. So a lot of people have it backwards and think, well, you need to prove to me that it's exempt or that it's taxable. And it's actually the opposite way. The burden of proof is on the person selling that it's not taxable if they're not collecting tax. A lot of people will talk about services not being taxable, and there are some services that are not, but basically if there's an imposition in the law, meaning if it's written in the law, then it becomes a taxable service. They sort of used a broad paintbrush with that as well, because they said, well, if you repair, service, alter, or maintain tangible personal property, that's a taxable service. Well, if you start thinking about that, tangible personal property, again, is a physical item. If you're doing something to it, that's probably going to be a taxable service. I used to go to Kansas City about once a month before this pandemic hit and teach, and a lot of people were doing the embroidery, and they would buy these big machines, and they would tell me that, well, if someone just brings me their shirt and I just embroider their name on their shirt, that's not taxable, is it? Because that's just a service. And I'd say, well, just put it through this filter called the law and see if it catches. Did you repair that shirt? Well, first of all, that shirt's a piece of tangible personal property. Did you do one of these things to it? And did you repair it? No, you didn't really repair it. Did you service it? You sort of serviced it, but did you alter it? Well, yeah, you altered that shirt. So that's how that is a taxable service, because you altered a piece of tangible personal property. So that's kind of how they look at it when you're looking at, is that service taxable? That's one of the ways. And they also have other services that are taxable. The construction field, construction contractors. So they're installing or applying tangible personal property into real estate. That's a whole different ball of wax. That sales tax is much more difficult. You guys are not dealing with real estate, so be thankful you're not dealing with that sales tax, because it's twice as hard as what you're dealing with. Admissions to places providing amusement, entertainment, or recreation. That's a taxable service. So you go to anything that's like a movie, a theater, a fair, carnival, they're going to collect sales tax on that. Warranties are taxable. Maintenance contracts. And that is strange, because that doesn't seem like a physical item, but it's written right in statute that those are taxable. They call them maintenance contracts, and that's defined as a warranty, basically. And to me, that's an intangible. Intangibles don't have sales tax. However, intangibles are things like interest and insurance and things like that. And I looked in the insurance statutes, and sure enough, it clearly says that maintenance contracts are not considered to be insurance. So I think they covered themselves. And the thing is a lot of these warranties and maintenance contracts feel a lot like insurance, but they're taxable. So that when they're sold, they collect sales tax on them. And how that works when a lot of them have a copay just like insurance. So basically anything covered under the warranty will not need sales tax on it, but anything out of a customer's pocket will have to have sales tax collected on it because it'll be considered that portion has not had sales tax collected on it. So FYI, whenever you use a warranty and anything coming out of your pocket, they will collect sales tax on it. Now you know why. Now what's interesting is tangible personal property. Animals are considered tangible personal property. A lot of people don't realize that. So pets. So if you go take a dog to the dog groomers, they'll collect sales tax on that because they're altering or maintaining tangible personal property. Well, if you or I go get a haircut, they're not altering tangible personal property. They're altering a human being. So the question I get all the time is, well, why, when I go get a haircut, it's not taxable, but if I take my dog to get a haircut, it is. Well, now you know why, because animals are tangible personal property. And when you do something to alter them, maintain them, that is just, I mean, it sounds kind of cold because, I mean, it's part of people's family, but in statute, basically, these are tangible personal property. So you're altering or maintaining tangible personal property by giving them a haircut, shampooing them, that type of thing. And I have had people, it's been about 4 years ago, I was talking about this to somebody, this actually in the Wichita area, and the poor gal was in tears when I told her this because I told her it was tangible personal property. And she told me that Fluffy was part of the family. And I told her, I still believe, I agree with you, but still taxable. Now it started out that in 1937 that they started collecting just the state sales tax, and then the 70s happened, and they allowed cities and counties, the local jurisdictions, to impose a sales tax. Within cities and counties, now they have the ability to create special jurisdictions. I don't know if you guys are aware of any of these. Community improvement districts, transportation development districts, Darwin districts. The popular ones at community improvement districts, they'll pay an extra amount in this isolated area, this special area, to develop. Most of the time, it's going to be like a strip mall or a hotel or something like that. And so the sales tax will be, there'll be an extra amount of sales tax when people go shop in that area, and it'll develop and pay for that area for a limited time. Now, I say limited, it could be up to 22 years. So I'm not sure if any of you guys are aware that they're all over the state. For example, here I'm in Topeka. We have several of them. We have one on the west side of town. It's Academy Sports, and that it's strip mall area there. The typical sales tax in Topeka is 9.15%. It's an extra 1% when you go there. It's 10.15%. So the state sales tax rate right now is 6.5%. And so cities and counties then have the ability to impose a sales tax. As a business, you're required to collect what we call the combined rate of sales tax. That's the state and local sales tax. You send it all into the Department of Revenue. The Department of Revenue distributes that. Well, you'll see if you were to file a sales tax return and you were to sell in multiple jurisdictions, that's part of the sales tax return. I'm glad we do it that way. There are still some states that they don't do it that way. Some states, each jurisdiction has their own return. I'm glad we don't do it that way because I actually had a contractor call me, and he was doing 25 sales tax returns a month because that's his business. In a lot of these jurisdictions, you got a city, a county, sometimes a special jurisdiction. I just you couldn't do anything but sales tax returns at that point. So at least we don't do that. Now, if I was in person, I'd be asking you guys if you had to guess where the highest combined rate of sales tax in Kansas was, where you think it would be. Most people guess Johnson County, and that's not it. It's a community improvement district. It's, whoops, sorry about that. It's actually in Ottawa. It's 11.6%. It's a community improvement district. It's a Holiday Inn Express. And most people are kind of shocked by that. And there are some just runners up that are 11.5% in Junction City, Leavenworth, Coffeyville, and Chanute. So if you notice, they're mostly hotels, a strip mall, and one's a Love's Travel Plaza. But just kind of show you, that's those community improvement district. That's what all of those are. So kind of shows you people sort of blindly pay sales tax and don't pay much attention to it until they make a large item purchase, like a car. And then they notice it. And then they'll say, what is that dollar amount? What is that for? And then the dealer's going to say, well, that's your sales tax. And so that's typically when someone throws that into financing, and then they'll pay interest on sales tax. So you'll probably dazzle your friends with this useless trivia here tonight. Do you know what the highest rate in Kansas is? 11.6%. So what rate of tax do you charge in sales tax in Kansas? What rate of sales tax, that combined rate? Kansas is destination sourcing. So since 2003, we've been destination sourcing. What is destination sourcing? That means that as a business, you will collect that combined state and local sales tax rate that's in effect where the end user takes delivery. So that may be where they pay for it, but not necessarily. So example, if I go to Kansas City and I go to Nebraska Furniture Mart and I pay for a couch right there, tell them, hey, deliver it to me in Topeka, they will be collecting the Topeka rate because that's where I'm taking delivery of it, even though I paid for it in Kansas City. Now, if I go there with a pickup and pick it up right there, and I'm paying for it there, they're going to collect that rate. So it's where the end user takes delivery. So that's great, but there's 900 and some jurisdictions. How do you find the sales tax rate? Well, you can go to the Department of Revenue website. We have a lookup page. Right on the Department of Revenue website or on the front page. And if you're using software, you can link that up with the electronic services. So that's probably more or less what you're going to want to do if you're using software. Most people, if you're small and just doing small business, you'll go to that page and look it up. And by the way, if you go to our website and look it up, there's a part in the statute that says if you've used our website to look up the sales tax rate, and we were to give you an inaccurate rate, you are protected by statute. So it gives you a request number, and you save that. It gives a new request number every time, and that's protection. Again, it's kind of like your get out of jail free card if we were to give you an inaccurate rate. So you definitely want to use our website or have something linked up to our website that gets that request number when you're looking up the sales tax rate. There's several apps out there that will look up rates, but you're not protected using those. You're protected using our website, but not any other software. And my question always to people is, where do you think they get their information from? You might as well go to the source and be protected. So now, when I say that, that may not be as convenient, but if you can get your software to get linked up, if you go to our electronic services, they can help you get that done. So that you can then be able to use your software that's linked up. So it'd be just like using ours, and you have the request number and you're protected. So people just don't know this. A tax exempt entity, just real quick. Most people think, well, I'm a business, I'm going to be issued an exemption certificate. No, you're not. You're issued a sales tax number. An exempt entity is a nonprofit organization. Well, just because somebody is a nonprofit organization doesn't mean they're automatically exempt from sales tax, because that is a federal income tax status that exempts them from federal income tax, state income tax, but not sales tax. That's not an automatic exemption. They first of all have to be listed in statute 793606, which is exemptions to sales tax. So they're either specifically listed or there is a category that they would qualify under in statute 793606. Okay, and then it would list there that they are a nonprofit, and then it would say this specific entity or this category. Then they would have to apply for their exemption, and if they're applied, then they're approved, and then they would be issued an exempt entity certificate. So there's a process for them to be issued this exempt entity certificate. So what we're talking about are like cities, counties, political subdivisions, churches. Then the specific ones, Booth Theater Foundation, Jazz in the Woods, Spina Bifida Association. So if someone ever comes to you and say, "Hey, I'm a nonprofit, don't charge me tax," that should be a red flag, because you don't ever want to sell somebody something without tax, without receiving a document. Because if you don't, first of all, it won't be exempt. In order to be exempt, you must have a signature, and you must have that on file, and a signature on an exemption certificate. So you don't use a letter, use an exemption certificate. So an exempt entity, when they get one issued, I'm showing you what it looks like, and they expire. So they just renewed these last year. They will be renewing these again on October 1st of 2024. So no matter when one of these exempt entities became an exempt entity, they all expire on the same date. So all the churches, all the cities, all the counties, all the schools, universities, they all expire on the same date. So they all have to renew again. So if a church comes to you and they're going to buy something, they got to give you a copy of this exempt entity certificate, and they have to sign it. And most of them, what it says on there is the money must come directly from them. So that's what they call a direct purchase. So it can't be a reimbursement. So that's the other caveat there. So that's if you take this and it meets those criteria, it says, and you can read it right on the exemption certificate, then you can take that. You're taking this in what they call good faith then. So the second you take it, they've signed it and they've met this criteria, the money's okay, it's coming on their check, or you have a direct billing account, or they have a credit debit card from the account of the school, church, or whatever. Now you can take this certificate and they sign it. Now you just transferred the liability, the responsibility of the tax over to them. And they have a signature. So it's an affidavit. You took it in good faith. If they say, well, I'm just a nonprofit, and they say, well, I'll give you my number, that does you no good. So just FYI, you always want a certificate. Now you can blanket certificates, meaning you don't have to take one every time, so long as you have multiple sales to that same entity, which means more than one within a 12-month period. Okay, so that's an exempt entity. They're issued a certificate. If you're in business, so you're selling, you're buying stuff and you're going to sell it, you are going to be issued a sales tax number. And don't get freaked out about a sales tax number, because it's nothing magical about it. It's going to start with 004. If you have an EIN that you got from the IRS, which is, they title it the employer's identification number, doesn't mean you have employees. That's just the name of that number. That's sort of like your business's social security number. It's just the identification number of your business. So this sales tax number is going to have 004, which is just our code for sales tax. It's going to have your EIN. It's going to have an F. It's going to have a dash. And then it's going to have how many locations you are, typically 01. So we can pretty much guess what your sales tax number is going to be if you know your EIN. It's going to be 004 dash your EIN F, and then however many locations, probably dash 01. So it's not like we're a genius. We just didn't make it real complicated. So if you got a sales tax number, you use that number on exemption certificates that you just print off of our website. They're just the public website. They're just a PDF you print off. So we have people all the time applying for manufacturer, processing, exemptions and numbers and all these things. And they have a sales tax number, which they would be denied for that. And they just didn't realize that they had everything they needed. So this is the most used exemption certificate right here that you're seeing. It's called a resale exemption certificate, ST28A. So when you're selling, you're allowed to buy everything that you sell without sales tax, because the law says that the end user is the person who's supposed to pay the sales tax. With that said, if you paid tax on the stuff that you're selling, it says that you're supposed to collect sales on the gross sales, and it doesn't make a provision for anyone if they paid sales tax on it. So you would still have to collect sales tax on the gross sales, and then you could apply for a refund on the amounts you paid for the items when you purchased it. So just FYI. So a resale exemption certificate, all you would do is fill it out. Again, it's an affidavit. And again, your vendor's taking it in good faith. You give it to whoever you're buying your stuff from. It's their good reason why they didn't collect tax from you. Or if I'm buying from you, maybe I'm going to buy something from you and sell it. This is what I would give you. And this is what you're going to put in your records. Heaven forbid you're ever audited, why you didn't collect sales tax from me. So I would have my sales tax number, and I would sign it as an affidavit. This is typically, the resale exemption certificate is typically used for something that's already put together. It comes as a whole. It's okay if it's used for the next thing I'm going to talk about, but that's what it's designed for. The next one is called ingredient or component parts. Well, that's the next most used one. And that's sort of what, if you're like raising animals, it's kind of weird because you're kind of putting ingredients, you're building this animal, you're making this animal. So you get it as this small little puppy. And well, now you have to put stuff into it to make it grow. So these are actually ingredient component parts to make it grow. So you're allowed to buy these ingredient component parts without sales tax because you're going to sell it at some point. And actually, the animal that births the dogs, you're able to buy without tax as well, because it's creating the dogs. Until the point that you sell that dog and it's no longer giving birth to animals, you're able to buy that dog without tax because it's part of your creating this product, if you think of it that way. It sounds so cold when you're talking about these live creatures, but that's kind of how you kind of break it down to look at it that way. So if you're raising these animals to sell, what goes into this animal, what goes with this animal, trying to think of it that way. Well, you're going to put food into them, and if there's medicine, you're going to put medicine into them. All these types of things. Now, what don't you put into them? What is something you use over and over again? Well, now you're the end user of that, so you would owe tax on that when you buy it. So if it's something you use, so what would that be? Well, if you have a cage that you are using over and over again, well, that's yours. So when you buy that, you would owe tax on that. Now, if you sell the cage, well, you can buy the cage without tax and sell the cage and collect tax when you sell the cage, that type of thing. So collars, that type of thing. Now, I'm not sure if we do agriculture. Agriculture's very similar to this. It just has its own certificate. It's a ST28F. Very similar to raising animals. They're just raising it for food, that type of thing. The veterinarian, very similar. Veterinarian's kind of interesting. It falls under categories sort of like dentists and agriculture, because they kind of cover everything. They the veterinary service itself is not taxable. Well, what happens when they provide a service that's not taxable is most everything they purchase is taxable except any type of medication that that has a prescription. If it has a prescription or is administered by somebody who is licensed, they won't pay tax on that. And a lot of times I get asked, well, what certificate do I use if it's not covered on the veterinarian exemption? Well, we have a designated generic certificate. It's just the ST28. So that's the one I tell them if it doesn't look like this one's going to cover it, use the ST28 because that'll work, because it's just a designated, sort of like the generic certificate that works to fill the gaps in that, because sometimes they do have some that kind of doesn't quite fit into here. What's interesting is if they have any kind of gas that they administer, it works the same thing for dentists. The gas itself would typically be exempt, but the bottles they come in would not, which I always find that interesting. That's the same with farmers for propane, same thing for dentists with the nitrous oxide. And I never quite understand why the gas is exempt, but the containers are not. But just the way it's written in law. I guess that's kind of sometimes just because they said so sometimes. Now, if you sell, let's say you sell a puppy and the end user takes delivery outside of the state of Kansas. Well, you're not going to collect any Kansas sales tax, simply because Kansas can only collect Kansas sales tax in Kansas. Our laws are only good in our state. We can't enforce our laws in any state except Kansas, and no other state can enforce their laws in our state. So if you deliver, now if they come to our state and take delivery, well, that's different. They're within our jurisdiction. But if you deliver it to them in another state, now you're in that jurisdiction, so you're subject to their laws. So what you would do is in your gross sales, when you file your sales tax return, there's a deduction for outside of the state. You just need a good reason why you didn't collect tax. Well, delivered outside of the state, something like that, an address where you delivered it. I'm not sure you would ship them, but if you do ship something, you'd have a shipping invoice, that type of thing. Just to keep some kind of document, some kind of good reason in your files why you didn't collect sales tax. Well, if it's outside of the state, that's why. Now, the tools of the trade that you use to do what it is you do, you owe sales tax on if you buy it inside of the state. If you buy it outside of the state and you didn't pay any sales tax, or you didn't pay an amount equal to or greater than our combined rate of sales tax, you owe something called compensating use tax. And a lot of people think this has only been around since the internet's been around, but it's been around since 1937. So it's the same exact rate as sales tax, dollar for dollar. Since Kansas really doesn't exempt food or anything like that, so we tax everything in Kansas. So compensating use tax and sales tax are the exact same rate. But compensating use tax is for first criteria is you purchase it outside of Kansas. And it's something you didn't pay sales tax on or didn't pay enough sales tax on. If you didn't pay enough, you would owe the difference. So if I went to Colorado and I bought an examination table, and if their rate was 9% and ours was 8%, I would owe the difference of 1%. If their rate was 10% and ours was 9%, would I get a refund? No, I would not, but I wouldn't owe any. I would just keep the receipt to show I paid at least an amount equal to or greater than ours. Just trying to think of any. I just squished a whole lot of information. I got a 3-hour class on this, so I'm trying to squish it into a short amount of time. Please ask me questions if you have them. I'm trying to touch on some, and you probably do have some questions. What questions do you have?
Thank you, Mr. York, for that wonderful presentation. At this time, we'll turn it over to Dana Ladner from the Kansas Department of Agriculture. Dana, have there been questions submitted for our participants?
There have, Mark. Thank you very much for that. Carl, I wanted to go back. This came in early on your private letter ruling that you talked about. How often do folks use that? That was just a question. You know, is this something readily available that folks know about, or is this person just missing out by not knowing about it?
Well, they're sort of missing out by not knowing about it. It's used typically for gray areas. There's some areas that are just pretty concrete that, you know, that is kind of common, but it's used for areas where it's the answer's not so clear. And a lot of people don't know that that's available. If you were to write into the IRS, they do charge for their rulings, but for us, it does not cost for a private letter ruling. I can put that back up there so if they want address, but yeah, so that now it takes a little time. So depending on the question and types of things, and what happens with this is we research it, make sure, check all the laws, see if there's any other previous rulings on this. See if there's any court cases on this that would affect this. And then basically we're looking for accuracy. That's really what we're doing. We're not looking to make it taxable. We're not looking to make it exempt. We're just looking for accuracy is what we're really doing.
Well, great. Appreciate that additional information. Participants, if you have any questions for Carl, go ahead and submit those in the question and answer feature that we have here with Zoom. That would be great. You talked a little bit, Carl, on the destination-based sales tax policy, and you gave that site where folks could go. How frequently is that site updated was a question.
Sales tax rates change, have the ability to change quarterly. So cities and counties, either they sunset or they've voted on a change in their sales tax rate, that types of things. So quarterly that changes. So 4 times a year. So that's where you want to take a look at that, make sure it's up to date. Now what's interesting is when you go to the website and look at the Department of Revenue, when you look through the lookup site, that's going to be the sales tax rate right now. When you file your sales tax return, that's usually a 30-day delay. Okay, so that's 30 days. So if the sales tax rate has, let's say it's gone down, a rate has sunset, you're filing your sales tax return, it kind of confuses people sometimes because, well, wait a second, how come it's higher when I'm filing my return than the website? Well, it's accurate on your return because at the time frame, you're filing an accurate rate, but it's sunset, so now it's a lower rate. So the next time you file, it'll be a lower rate.
The next question falls right in line with that, Carl. By what date must businesses submit and have their taxes filed?
Good question. Well, first of all, magic number for sales tax is the 25th. So then when you register for sales tax, what they're going to do is try to see what category you're going to fit into. So it's going to be based on how much sales tax in a year you collect. So when you register, they're going to try to figure out which category you fit into. So if you're an annual filer means in a whole year, you're collecting $400 or less in sales tax. And then the threshold changes by 1 penny. So it's 400 and a penny to 4,000, your quarterly. 4,000 and a penny to 40,000, your monthly. And then anything over 40,000, they have what they call prepaid monthly. So you're actually paying advance. You're estimating the first 15 days of the month and then paying the last half of last month. So it's going to be based on when you register for your sales tax number. They're saying, well, how much are your sales going to be? How much do you think you're going to be collecting in sales tax? Now, if you're making large sales, but maybe a big portion of your sales are exempt sales, I sell a lot to exempt entities or that type of thing. So you could have large sales, but not large tax collection. So we've had large sales as annual filers before. So that's how that works.
The question came in that actually goes just opposite of what you just talked about. What if someone has no sales for the course of the year for sales tax to report on it. What type of filing is needed then, or additional paperwork with it? If for some reason they, like I say, no sales tax to report, how is that handled?
That's a good question. If you are registered and have a sales tax number, even if you don't have any sales, you still have to file a sales tax return. If you don't, we got a nasty computer that sends out nasty letters that does nothing but, you don't want it. You don't want, if you ever, by the way, if you ever get a letter with Department of Revenue, do not ever ignore it. Just answer it and things will be good. But they've made it fairly easy. If you have what they call no sales activity, you log in and there's a box there, you click it and you're pretty much done. Most states have gone to that. There's a few states that haven't, but even if you have no sales activity, you still have to file your sales tax return. So just FYI, if you're not going to be selling, that's why we recommend don't get a sales tax number till about 30 days or so until you're going to start selling. Now, why would you want to get a sales tax number before you start selling? Well, because you need that number on those exemption certificates, right? So you want to be able to buy the stuff you're selling without sales tax, like the food and different things. So that's why. So it's not necessarily a bad thing to have a sales tax number and you're not selling, because there are some good reasons why you would do that.
Great. We had a question come in on the Q&A. Thank you for using that function with it. Appreciate that. And the question is, are 501c3 animal shelters exempt from sales tax on the purchase of kennels for their years? So a 501c3 animal shelter, are they exempt from sales tax on the purchase of the kennels that they're using?
If they have an exempt entity certificate. Most I only know one that is, and they're not even an in-state and they don't use it. So the real way that you would know is if they have an exempt entity certificate. I would have to look them up. I don't have them all memorized, but I would have to look them up and see if they have an exempt entity certificate. Now, I'm glad you asked that, because that's sort of a trap right there, because it sort of seems like, well, they should just automatically be exempt. They may not be. So we'd have to look it up. If they are exempt, you would have to get an exempt entity certificate from them if you're selling to them. So don't just accept it. You'd say, well, I need something from you. And I just give you a fair warning. Some of the places kind of give you a hard time about giving you the certificate, which I don't really know why, because they can make copies of it, print it off, but you need that. They're not going to pay your tax for you or penalties or interest if you're audited. So if they give you a hard time, just remember this, the statute of limitations 3 years. We can go back 3 years if you have a sales tax number. If you don't have a sales tax number, there is no statute of limitations. So they can go back as far as they want to audit you. So just FYI, a lot of people ask that question, but they're not going to pay your tax for you if in your penalties if they don't give you a certificate. So always get a certificate.
That's just great information there, and an easy thing to remember is paperwork is so essential, which we had previous webinars where we talked about accounting and paperwork and those type of things and how important that really is. You just mentioned penalties with that in that answer, and a question came in on how often does the Department of Revenue review taxes, the sales tax, the pieces that come in, and what type of penalties are assessed, or what are the most penalties utilized with that?
Well, it's tied to there's interest and penalties. So penalties like 6%, up to 24 months, up to 20. So you could have like 2 years worth of penalties. And you can have the interest rate is tied to the federal interest rate for past due and underpayments and different things like that. It's also the same interest rate that if we were to owe somebody money, that's the interest rate we would pay. And I get to calculate that every year, which it sounds impressive, but all it is I look up what the interest rate is for the third quarter and add 1. So don't think I'm good at math. I always tell everybody I'm no good at math. That's why I went into taxes. So, and if I was any worse at math, I'd do federal taxes. So I got nothing but bad jokes, by the way. So, but the interest rates, I believe right now it's like 4%. So it changes every year. Now it's this upcoming year, it's going to be the exact same as last year. So it's 4%. So that it could accumulate at 4% annually. So that's like 0.333 or something like that. Or so that's why you don't ever want to like avoid a letter. Usually it gives a time frame like 15 days or 30 days or 60 days. So if you ever see that, call in right away. Don't be afraid of us, because we will absolutely work. I mean, we get a kick out of helping somebody, by the way. I mean, if we can help somebody, you just made our day. Everybody thinks we're like the big scary people, and they don't realize we get a kick out of helping people. So, call, please. And I'm not an auditor. The auditors are the ones that really get a kick out of it too.
That's funny. I mean, it is a service to the state of Kansas, no matter which agency folks are with. Renee from Manhattan submitted a question for us regarding pet boarding. Pet boarding wouldn't charge sales tax because they don't alter the dogs. Is that correct?
Here's why. You got to think of it like this. If I store my car in a garage or store it somewhere, that's not taxable. Same thing. It's just we're storing a piece of tangible personal property somewhere. So it's the same thing. It's not taxable. Now, if we sell them something, extra, then that could be tax. We sell them collars or whatever, then that could be. But just boarding, nope, that's not taxable, because they're just. Yeah, and she's all over it right there. She didn't do anything to them. That's a good way to look at it. She looked through it and it didn't catch in the filter anywhere. So that's exactly right.
Well, great on that one. Appreciate the question with that. At the end of your presentation, Carl, you mentioned compensating use tax.
Yes.
And that's a lot of information in a short amount of time. A question came in. Are there examples available on the Department of Revenue website to help participants, small businesses, etc., walk through the process?
Yeah, in fact, we have a publication, the KS-1510 is our basic sales tax booklet. And we have examples in there of actually filling out the sales tax returns, of compensating use tax, sales tax, different things like that. So yeah, we do have examples. And they have access to, that's my direct email, my direct phone. If they have questions, the whole state has it, so you might as well have it too. Sometimes I'm hard to get a hold of, but I will get back to you. And so, you might as well talk to the guy that updates those publications, and I'll answer your question.
Well, great. Participants, if you have any more questions, please put those in the Q&A. We're about out of time today, and I don't want to miss any of those questions that might come in. We did have one submitted earlier, Carl, about promotional gifts. Is there a limit that can be claimed on a promotional gift, or how is that treated in regards to sales tax?
Good question. For a promotional gift, that means you're giving it away. If you're giving away, you must own something to give it away. If you own it, you're the end user. So when you purchase that, you would owe sales tax on that, or compensating use tax if you bought it outside of the state. So that's a good. I'm glad they asked that question, because that's one area when someone's audited, they're like, I didn't know that. So yeah, you would, when you purchase those types of things, you're the end user of those. So you would have to pay sales tax on those types of things. Same. I'm not sure. Kind of along those lines, donations, and again, to give it away now. Donations to one of those exempt entities I was talking about that had the exempt entity certificate, If they have one of these exempt entity certificates, if you donate to one of those people, if they give you an exempt entity certificate, then you don't owe sales tax on those donations. But there's a lot of nonprofit organizations out there that are not exempt entities. So if you donate to one of them, you would owe sales tax, and it would be at your cost, what you paid for those items. So maybe you're donating dog bowls, or I don't know. I have no idea. But if you're donating something, it would be at your cost, what you paid for it. So, but again, if it's an exempt entity and they give you an exempt entity certificate, we have a regulation that says that you would not owe sales tax on that. But everyone else you would.
Right now, there aren't any other additional questions in the Q&A. Carl, thank you very much. We appreciate your time today and everything that you have provided us for information. With that, our next webinar for the Small Animal Facilities series will be on Thursday of this week with Miss Christiana Bradiosis, who's an associate professor in the School of Social Work at the University of British Columbia in Vancouver. We're going to talk about animal hoarding on Thursday. So again, thank you everyone that participated today. There are no additional questions with that. So with that, everybody have a great afternoon. Thank you.